For us, we look at USD or local currency generally when it comes to Asian markets. That's the traditional markets that issuers will tap and investors know Asian markets for when it comes to investing in bond markets. So for us, we have a iBox USD Asia ex Japan index. It's a market value weighted index, so there's no capping or no additional synthetic weighting mechanism, just simply how much is issued. So when it comes to that index itself, looking at the dollar issuances, definitely Korea has been helping to contribute to the issuances. And this year, we also saw that Korea was also one of the biggest contributor when it comes to issuances. But the thing is, iBox USD Asia ex Japan, what we have observed is at the peak about 2021, before the China real estate crisis, it was like in about $1.4 trillion. That's the market size. And then right now, I mean, at the end of last year, it was about 1 trillion. It dropped to about 1 trillion. And then this year, as of end of October, we saw it actually dip below 1 trillion. So that's something that we have been observing. And in our discussions with our clients, our benchmark users, the fund managers that uses our indices, they also have been looking at how can we make up for the capacity that is being lost when it's shrinking. They need to consider, is there other markets within Asia that they can invest in? So for us, we have a iBox USD Asia Pacific, which includes Japan, Australia, New Zealand into the picture. And that gives you about 500 to 600 billion more of notional amount to sort of work with. So that has been sort of most of our discussions right now shifting towards APAC landscape rather than just looking at Asia ex Japan. And Japan has been issuing quite a fair bit this year, particularly I think about 75 billion notional has come to market, and this is year to date as of October. So we don't know what will happen in the next 2 months. Their weight within the iBox USD Asia Pacific has also increased by about 2.19%. So that's something that we have been keeping an eye on. And now that Australia and Japan, well, for Japan case, since they have moved away from zero rate like interest rate, they're moving the opposite direction of all the other central banks, right? Central banks are cutting rates most of the time in this economic landscape, whereas Japan is on the other trajectory, opposite direction of everyone. So it's looking more and more attractive for investors, for asset allocators like Joanne, possibly. And so that is something more appealing for investors now. For Australia, because the policy rate is higher compared to other Asian markets, while it's still AAA rated in terms of sovereign, so there's still that appeal. And in terms of local currency market, I think right now what we have seen is sovereigns have been upping their issuance this year, particularly. I think last year was about 1.2 trillion, but this year, sovereign year to date has been about 1.4 plus trillion in terms of USD dollars collectively within our iBox ALBI index.